Good morning to everyone. I'm Ricardo Moura, Investor Relations Director and M&A. Welcome to the conference of results of the second quarter of 2022 of the ABC Bank. If you want to follow the transmission in English, please click on the translation button at the right-hand side on the bottom part of the screen. Before we start, I'd like to share the following disclaimers. Declarations that might be made during the conference relative to the perspectives of business and ABC Bank, projections, operational targets, financial targets, are beliefs and premises of the company's management, and also information that is available on the bank. Future considerations are not a guarantee of performance. They involve risks, uncertainties, and premises, and they refer to future events and depend on circumstances that might not happen. Investors' analysis should understand that general conditions, sector conditions, and other operational factors can affect the future results of the ABC Bank and can take to results that differ materially from those expressed in the future conditions. Due to the data protection law, we inform you that this presentation will be transmitted in our LinkedIn and YouTube, and after you know that the personal data, such as image and voice, might be shared with no loss or against the law. I let you all know that this event is being recorded and being transmitted simultaneously on the internet via YouTube and LinkedIn. All the content and the presentation are available on our website. To follow the presentations, you can download them, and at the end, we will have a session of questions and answers. And here beside me, we have Sérgio Lulia, our CEO, and Sérgio Borejo, our CFO. Welcome. Thank you for being with us today. Good morning to everyone. Good morning, everyone. It is a pleasure to share this moment with you. I'll now invite our CEO to talk about the results of ABC Brazil. In the second quarter of 2002, we'll bring you the main highlights and the main operational highlights. If you want to access the material, you can read the QR code on the screen. Sérgio Lulia, the floor is yours. Thank you, Ricardo. Now I'm going to start with the highlights of the period. In the second quarter of 2022, the net profit reached 202 million reais, a growth of 10% in relation to the prior quarter and 48% in relation to the same period of 2021, equivalent to an annualized return over the shareholders' equity of 16.6%. The eighth quarter of expansion, we ended with a growth of 6% in relation to the prior quarter and about 26% in relation to the same period of last year, reaching a spread with clients of 4.4% during the period. The quality of the credit portfolio continues being healthy with a low volume of delays and high coverage. In the second quarter of 2022, we expanded our commercial presence in over 8 cities, working now in 48 municipalities. This movement is to increase the service structure to our clients, especially in the corporate and middle segments. This strategy allowed us to continue growing our client base, which at the end of the quarter reached 3,988 corporate clients, a growth of 547 clients when we compare to the quarter, the largest historical growth in a quarter. And to support this growth, we continue investing in human capital. We have now gone over the emblematic mark of 1,000 employees, result of the expansion in new segments of clients, the diversification of the product portfolio, and the development of new distribution channels. Finally, we would like to highlight the result of the investment bank that reached a revenue of 44 million in the quarter, the best of its history. due to the area of debt capital markets, but also an important contribution from the merger and acquisitions area. Following our presentation, let's remember our growth strategy: expand the number of clients, and as a consequence, the volume of transactions. Also to serve our clients, but also the stakeholders, suppliers, employees, and the clients themselves. Expand our portfolio of products, leveraging our relationship with the companies, diluting the acquisition and maintenance costs of clients, and diversifying our sources of revenue, reducing the dependency to specific lines of business. Utilizing third-party channels to distribute our products, and also distribute third-party products through our own channels. All this with a goal to expand the structural return of ABC Brasil. It is important to highlight that we continue to increase our geographic presence. Let's now take a look at a short video with the highlights of our commercial expansion. We have 34 offices of partners. We have new management accounts in the segment that is middle and corporate, all to offer our clients the best service possible. And adding to this, ABC Link has been responsible for about 10% of the operational increment of the middle segment during the second quarter. And finally, our client base continues its expansion with the new 547 new clients in the second quarter, the largest in the history, equivalent to an annual growth of 966 clients, an expansion of 32% in 12 months. Now let's go to the next topic. The expanded credit portfolio has shown a growth of 13.6% in the annual comparison, within the guidance of growth for the year between 12 and 16%, due to the corporate segment with the annual expansion of 21% and the middle segment, which grew 34% in 12 months and now corresponds to 8.1% of the total of the expanded credit portfolio. I'd also like to highlight the private bonds, which expanded 37% in the quarter due to the emission of rural credit and the corporate segments in CIB. This is an instrument that we structured as of February 2022. In the next slide, we're going to show the sectoral segmentation of our expanded credit portfolio, which continues being very well diversified with a fragmented portfolio and defensive. This composition, allied to the origination of operations of quality, has contributed for the resilience of the portfolio during the different economical cycles. The sectors with the largest increases of participation were services, 2.1 percentage points, in agribusiness, 0.8, while the sectors with the largest decreases were energy, -1%, and civil construction, also real estate, -1%. And now let's emphasize the margin evolution and the spread with clients. The financial margin with clients had its 12th quarter of expansion, growing 6% in the quarter and 26% in 12 months. Due to the change of the product mix with a larger participation of derivatives, cash management, and currency exchange, FX, which are the products that command more spread and less usage of capital, and the change of the mix of the client segment with a larger relevance to the corporate segment and the middle segment in the portfolio. The spread, annual spread of clients reached 4.4%, 10 points base above the prior quarter and 50 points over the same quarter in 2021, the largest level in the 5 years. The spread with adjusted by the loan loss closed in 3.8%, a decrease of 10 base points in relation to the prior quarter, a reflex of the provision expenses, which constituted 50 million more. Now we're going to introduce the financial margin. The CDI was 111 million reals, while the margin with the market was 61 million reals during the quarter. As a result, the managerial financial margin reached 477 million reals in the second quarter, a growth of 7% in relation to the prior quarter and 38% in relation to the same period last year. This is the sixth quarter that we have expanded consecutively. Finally, the net interest margin, the NIM, was 4.5% in the second quarter of 2002, an increment of 100 base points in relation to the same period of the last year, the highest level ever since 2017. Now, we'll show you some indicators that reflect the quality of our credit portfolio. In the first chart, the operations that you can see above 90 days, they ended with 0.4 of the portfolio, below the average, historical average, around 1%. This improvement of the due loans is in the CIB as in corporate as well. The middle segment had a bit of an increase for 2%, still comfortable for this segment that has more diversification and spreads, and substantially below the provisional levels for the segment, which currently are at 4.5%. In the second chart, we have the coverage rate, which reached 619%, 175 percentage points above the level observed in the prior quarter, result of the drop of the volume of due loans and the reinforcement of the segment provision of CIB and corporate. In this slide 11, we show the evolution of the provision of expenses. This provision closed the quarter with 48 million reals, equivalent to 0.5 of the expanded portfolio, an increase of 0.1 points in comparison to the prior quarter, and a reduction of 0.1 percentage points in relation to the same quarter of 2021. This provision for loan losses reached 31.5 million reals in the quarter, an increase of 18.8 in relation to the prior quarter and a reduction of 32.4 in relation to the same period last year. Even taking into consideration, 1, the constitution of an additional provision, generic and anti-cyclic, of 50 million for the segments of CIB and corporate, and marginal levels of credit recovering. Now, you can see on the screen the balance loan losses in relation to the portfolio, which ended the quarter in 2.3%. In the vision per segment, there was a reduction in the rates of CIB and corporate, even with the constitution of the additional provision of 50 million reals, while the rate of the middle segment maintained itself as 4.5 of the portfolio after the formation of the additional provision that we carried out in the first quarter. Now, in the next slide, we're going to talk about service revenue. The service revenue reached 19.5% of the total revenue. It went higher for the first time than 100 million reals in one quarter, positively influenced by the growing contribution of the insurance broker that began operating in the second semester of 2020, and the recoverage of the guarantees issued that had a lower revenue in the prior quarter. But the investment bank was the highlight, responsible for a good part of this revenue. Let's have a look at a video. Take a look at our highlights. The area of investment banking of ABC Brazil has the best quarter of its history. There were 44.1 million in revenue. With the strong growth and important transactions in debt capital markets and in M&A, the companies Parebem and Indigo Brazil, the sale of the assets Sacre 2 and Santa Ana, CSN, the sale of TBN and GNF with Vale, and the issuance of 1.6 billion debentures, simple debentures, and the infrastructure of Copel. Our commitment is with results. As you have seen, this was the highest service revenue of the history in one quarter. Now let's present the expense variation and our efficiency rate. The personnel expense grew 39% in comparison to the same quarter last year, reflects of the inflationary effects and the growth of 32% in the number of employees during the last 12 months. We overcame for the first time the emblematic number of 1,000 employees, a result of the expansion in new client segments, the diversification of the portfolio of products, and the development of new distribution channels. The investment in human capital includes the reinforcement of our commercial strengths, also the support areas that are responsible for the sustainability of operations, and also adding new capacities like innovation, data science, and cybersecurity. The total expenses grew 46.8% in the annual comparison, while the efficiency rate reached 38.8% during the quarter, within the guidance of 36 to 39%, which was announced in the beginning of the year. A relevant increase of the revenues, balancing the expense increment related to the expansion of our operations. In relation to the evolution at the end of June, the balance was total of 43 billion reals, a growth of 8% in the quarter and 20% in 12 months. One of the success factors of ABC Brasil is the access to competitive funding in local currency as international currency with a good volume and interest time frame. This condition is supported by ratings that are equivalent to the Brazilian rating of the main risk agencies in the market. In one of them, 1 degree above the sovereign level. We believe that the quality of this is more relevant in a place with a quick increase of the interest rates and highlighting as being one of our main differentials. We can also look at the evolution of the net worth and the Basel in rate. We ended the second quarter with reference equity of about 6 billion reals and net equity of 4.9 billion reals. This Basel rate remained about 15%, and the level 1 capital reached 13.1, rates that we believe adequate to support the growth strategy of our organization. Here, in the slide 17, you can notice the evolution of the annual result. The recurring net profit of the second quarter reached 202 million reals, a growth of 48% in relation to the same period of last year. This trend can be explained mainly due to the increase of the margin with clients, the increase of the service revenue, and the increase of the revenue of the equity invested in CDI, and partially compensated by the growth of expenses, a result of the investment in new initiatives as I've already mentioned before, and the increase of the tax and the social contribution, a result due to the larger profitability during the period. The annualized return over the equity was 16.6 in the quarter, an increase of 430 base points in relation to the same period of 2021. When we analyze during the last quarters the shareholder equity and the annualized return over this equity in the second quarter of 2002, we have a consistent trend of growth, consolidating a structural elevation of profitability. The recurrent profit on the quarter was higher than 200 million reais in one quarter, whilst the return over the equity represented the eighth quarter with consecutive growth, reaching 16.6%. We believe that this result, even though initial of certain different initiatives of growth and diversifying the client base and the revenue sources, and at the same time a larger diversification of risk exposure, resulting in larger returns and more resilient returns during the credit cycles. Once more, we would like to reinforce our investment thesis that balances three different elements. First, we are an institution with a long history of profitability. We deliver shareholders attractive returns, consistent and growing through the distribution of dividend yields. Beside this, our results are sufficient to support not only the payments of our shareholders, but also the reinvestment that is necessary for the growth and the scale of gain of the current operations, which includes the continuous search for the reduction of the acquisition costs and the costs of serving our clients. Finally, we have invested resources and efforts to expand our operations in areas where we have obvious synergies, what we call the right to win. This includes capture of options and hidden values, which is something that we still have not totally explored. For the diversification of the revenue flows, a larger growth of our results, and finally, a structural increase of return of ABC Brasil. These are the highlights that we wanted to show you. Thank you very much. Thank you, Sergio, for bringing us the panorama of the results of the bank during this last quarter. I also thank you all of you that followed our transmission up to this moment. Now we'll open for questions and answers. So, all of you who are following us, you can feel at ease to ask questions. If you want to ask a question in English, go ahead and I will translate it to Portuguese. We are available to answer all your questions. Let's start with the first question from Ricardo Buchpiguel from BTG Pactual. Good morning. Congratulations for the result. Thank you for the opportunity of asking questions. We've seen the default in historical minimums, and even though we see good health of these companies in general, perhaps this should normalize to historic levels with time. So my question is, how does this normalizing risk, are we going to reach the normal levels? And I'd also like to understand the additional provision that you made, and if this makes sense to have some sort of reserve of provision for the next trimesters. What would this make sense for the structural levels of the bank? Well, thank you for your question. It is a question that involves several different aspects. We actually do have lower default rates than the historical level. That is a fact. And also, when you consider the increase of the Selic rate, as is happening. It's been going up consistently during the last year and a half. And the reason for this low default rate, which I believe that in our case it is extremely low, corporate default is low, and I think there are some factors that can help us understand this. For example, the fact of the Brazilian companies have gone through a series of crises since 2014 and 2015. This made the companies have a sort of a careful management of their investment strategy, of their leverage strategy, the profile of the debts, and this helped that the companies be now in a better situation. Another factor was the access of quality financing lines, which existed for the larger companies. One point to the capital market development, which we mentioned during our presentation, crisis, debentures, etc., that attended the quality fund for a large part of the clients. And in the case of the smaller companies, helped by the credits that were proposed by the federal government during the pandemic, FGI, Pronamp, that also brought quality. So today we are going through a small worsening in the rates. It's low still, and in the corporate segment, delinquency, it's low, but we do not see signs of changes. And when we take into consideration the level of the interest rate and the perspectives of the world economy, the increase of the interest rates all over the world, chances of recession in developed economies, which also always affect the Brazilian economy, we decided to make an additional provisioning then would be recommended by we had already done this in the last semester, and now we did this for the CIB corporate, so that even if there is a deterioration of these portfolios, which, as I said, we do not see this happening, but even though we do see this happening, the portfolio would be protected. Well, the next question that we have comes from Flavio Ishida from Bank of America. Hello, good morning to all of you. Congratulations for the results. My question is about the quality of the portfolio. We saw here the middle portfolio with a deterioration to 2%, and it's still not something to be concerned about. But were you expecting this? Does this change your growth appetite in this line? And if the provisioning level that you showed, the percentage of the portfolio that is 4.5%, if I'm not mistaken, if you believe this is sufficient and if it will grow even more. My second question is in relation to the expenses. You've been contracting a lot of new employees. The rate of increase of salaries will increase, and so you'll have more expenses. I know you have a guidance of the efficiency index that you're within this, but I'd like to understand, how do you see this? And at the end of the day, it's important to see the efficiency rate or index or the expenses itself. Flavio, thank you very much for your questions. I'm going to start answering, and then I'm going to ask my colleague to help me here. Well, when we talk about the middle market, the exposure, as we've said, it's a sort of more fragmented and diversified exposure. So you deal less with specific cases with the corporate and CIB, so just one company can change this rate, and it has more to do with the portfolio as a whole. This is a segment that today shows a total spread when we consider not only the credit operation but also other products, for example, cash management, insurance, etc. It's something that has a spread between 8.5% and 9% per year, and we have 4.5%, as you yourself mentioned. I believe that our business plan, we don't expect default. It's a segment that has spreads of this magnitude. So I think we did have this small deterioration. We are paying attention. It seems that it's stabilized. We cannot guarantee, but that's what it seems to be. So the provisioning of 4.5%, which was done in the first quarter, is more than enough, and we have no intention in increasing this, and even less do we think of revisioning our growth strategy for the middle. This is a strategy that will take the bank as we wish to a bank that attends companies of all sizes and all segments. It's a specialized bank in companies in selling products and credit service, and we believe that this our growth can be very big. We have the available capital, we have the teams, we have the technology investment. This is constant. We're investing a lot in technology to have a scalable structure, so we're very, very enthusiastic with the sector. Now, the second question, when you talk about expenses, I'm going to ask my colleague here to help me answer this question. Good morning, and thank you for your question. When we talk about expenses, we have come on a strong rhythm of contracting. We contracted 268 people in the last year, and if we add this to inflation, we'll reach more or less 45% increase of expenses during the period. This is the expected rhythm. We imagine that this would happen. It is totally within our expectations. The rhythm of the contracting of employees will continue taking place in the second semester, probably not in the same rhythm that took place in the first semester. And also bringing this curve will bring back the rate to the guidance rate. So we trust that we will comply with the growth guidance of expenses as well as the efficiency index. It is within what we had planned. Perfect. Thank you. Next question is from Eric Ito from Bradesco Bank. Good morning, everyone. Thank you for the possibility of asking questions. I have questions about the follow-up of NPL. We've seen an improvement of CIB, and at the same time, you made this additional provision. But I'd like to know if there's any specific case of provisioning in the quarter for the CIB. And my second question about investment banking, I'd like to know what the expectation is for this quarter. Do you think it's still going to be strong for this quarter? And what do you expect in the dynamics in this area for next year? Thank you, Eric. Well, let's start with the investment bank side. Here it was really a good quarter for the debt capital markets, but we also had an important M&A contribution. So what do we see moving forward? We see a good pipeline for both. So both on the fixed asset market, the market continues active, and also in the M&A, which is a traditional product with a longer cycle. And we now have advanced operations or operations already with the signing. So we're only waiting for the closure of the operation. For the next, we hope to have a good visibility, and we see a good quarter coming along as well. Now, talking a little bit about the CIB and corporate delay, you don't have just one big event. There's some events. In CIB, you have a structure which is more concentrated, but there's no one case that makes this movement take place. but it's several these past due loans. The decrease happened. It's due to a certain amount of occurrences. Thank you very much. The next question is Fernandes from JP Morgan. Good morning. Congratulations to all of you. I have a question about portfolio growth. We see that you've gone back to the guidance there and expanded, but the middle part is a bit lower, even though you grew strongly in the quarter. So my question is, what do you think you'll do by the end of the year? Will you remain in the guidance, or just to me, so that I understand better the volume? How do you see this demand? How do you analyze your appetite, and also the revenue? The NII, the bank has grown very well. The spread of clients, the results have been good. So the question is, should we, this expanded financial margin, these magnitudes of 5-6%, how do you see this? The spread is a bit more difficult to pass over. The mix, the middle mix continues helping. Just to understand, because I know that you have expense challenges, but the revenue has been very strong. So if we could trust the NNI a bit better, I think everything will continue going very well for you guys. Yeah, thank you, Yuri. Thank you for your question. We actually had lost a bit of traction in the first quarter, but it came back on the second quarter. Now you have a natural accommodation when you have new teams. So we opened new middle market offices in 8 new cities. In the corporate also, we expanded our commercial part. So the rhythm takes a bit of time, right? The cultural part, the credit filters of the bank, after 1 or 2, 3 months of this, hiring, we see that the growth starts happening, and that's what we hope that will happen in the second semester of 2022. So I think the guidance will be maintained. We trust that we will reach this. We've had good business opportunities, and we do not see the spreads increasing. So there's competition in the segment. We're having good conditions of pricing, the point of view of good conditions of cross-sell. Our business plans, when we imagined joining the middle segment, we imagined that the entry product would be credit, which is traditional in the corporate segment. And then with time, after 1 year, 2 years, where you have that client, then you can start selling other products. And that's not what we see. We see that the cross-sell is happening much quicker. And some clients, we start the cash management even before. We have a very good solution developed here. First, we have the cash management, then we come in with the credit. That has been a good surprise. We see currency exchange, assets for protection of exposures, currency, interest, etc. So we continue very optimistic, and the largest surprise, positive surprise, has come from the expansion of the number of corporate clients expansion. This is our most traditional segment. It's where we operate ever since this bank exists. We've always been competitive. We continue being competitive. It's our core, and it's a segment that has a very good performance, and we're very happy. The expense side is monitoring daily, right? Maybe that's an exaggeration, but weekly. And we are aware of the risks that expansion of the magnitude of 40% a year, of what this brings to the organization, if the revenue doesn't follow this. We do this monitoring very closely. Things are going well. I think the initiatives that we took 1 year, 8 months ago, whether it be product, segment, geographic expansion, they are bringing revenue, and this monitoring we carry out for you to maintain the efficiency in rate in a competitive level is fundamental for our business. Thank you. Next question, Pedro Leduc from Itaú. Good morning. Thank you for the call, for the question. Congratulations for one more quarter of expansion. My question is about image of clients. The spreads are not increasing. I think this could have been a bit more rapid with, I know there are other products that help this margin, so perhaps this helps to explain why this is a bit lower than what I expected. That's the first question, and I have another question, but I'll ask the other question later on. First of all, this question about the client margin. Well, the client margin in this, you had 3 vectors influencing this margin. First is a change in the mix of products. We continue seeing this happen in this quarter. Perhaps not as strong as the others, but this continues happening in an important way. Second, it is a change in the mix of clients. So as you have the entry of the middle, since they command a larger spread, this helps for an expansion of margin. We do not see this in an important way in the last quarter, but we see this now, and we hope that this will continue happening as we move forward. It's gradual, it's slow, but it's powerful for this expansion, image expansion that we have. Then you have to monitor the spread intra-segment. In this quarter, as Lulia mentioned, we had no change of this intra-segment spread up or down. So you have an interesting expansion of this margin. And what do we expect as we move forward? The evolution of the middle continues. The evolution of products should also continue, perhaps not as strong as last year. And you should have the portfolio helping in this margin expansion as well. I don't know if I responded to your question, but these are the drivers that we have behind our expansion. And remembering another point that's important, our business has a bit of seasonality. So historically, the second semester is usually more dynamic than the first one. This also should influence our results for the second semester of the year. Fine, wonderful. And to complete the discussion of client margin, one thing is the rates and the cost. We know that the new operations are generated with this funding, this current funding. So if we look at your slide about, we have the time frame, cash, finance, and other. Is there anything here that we should pay attention to about the average cost, this issue of the margin of the client for the second semester? No, I don't think so. This part, normally that's how it works, and it repeats itself like this. We have an abundance of credit limits both in the international market, and you have this on one side, the availability of credit. Then you have the attractiveness of products. Then, for example, when the Selic was lower, the attraction of this CLA product decreased, as you know. It's due to the taxes, physical people went to larger risk instruments, other bonds, because the bank bonds weren't yielding a lot. Now this attraction increases a lot. And the other issue is the fluctuation of the yield curves between the domestic and the international interest rates. So even though you have limits available in both markets, sometimes it's cheaper to capture resources in Brazil and do the hedge for reals than to capture here, which sometimes costs more. And having these open limits, we can try to do this arbitration to get the most efficient funding cost. It is what we've done. Credit portfolio has two indexing. It has about 80% in CDI and 15% in dollars. So the pre-fixed portfolio is practically non-existent. So the increase of the Selic rate has an impact which is practically non-noticeable when we talk about these operations. Can I ask one more question? This question has to do with the services. The huge jump in the investment bank, congratulations. You mentioned PCM, M&A, and in DCM in the video, we saw large volumes. So it's more my personal curiosity. How much of this are you retaining in the portfolios? How much are you able to distribute through your own channels, third channels? Remember the partnership with Inter to be able to issue fixed. Do you have to retain more? Is the distribution, the origination helping? How is this working out? That's a very good question. These recoveries of the capital markets are operations that are done for the distribution. Eventually, in specific situations that really don't represent a lot in the number of operations that we do, our propriety, which has been formed by distribution, we can have an order like for any other investor, but we don't do the capital operations for the portfolio. For this, we developed a distribution area which is very strong. It's an area of distribution that reaches from the large institutional clients, the large assets, the pension funds, etc., up to investors, smaller and more specialized investors. So we do this with a large number of assets, small and medium sized, that are specialized of taking over these risks, and these follow these operations and they purchase what is issued. And the partnership with the Interbank moves towards this direction. We have a distribution which is very well structured to distribute in this institutional market, but we don't obviously have retail. And then Inter comes in with this complementation from the point of view of distribution with a sector of operation which is more for people and not for companies. We have a portfolio now, but the bonds are acquired less by the emissions of the bank, but more of the market emissions. It participates as anyone else with the operational structure. Very interesting. Thank you very much and congratulations. The next question is Lucas Martins from Prada. Hello, good morning, everyone. Thank you for the opportunity. We cannot hear you, Lucas. Can you hear me now? Yeah, sure. Okay, good morning. Good morning, Ricardo. Good morning, everyone. Thank you for allowing us to ask questions, and congratulations for the result. My first question is about the investment cycle. I don't know the efficiency rate. Are you going to have an investment cycle which is going to be sort of calmer? You've hired most of the people. What is your vision in relation to this? And the second question, I'd like to have a correct interpretation about default in the middle? Is it ex-FGI? And what's the interference that this has had in this default? Perfect, Lucas. Well, the middle investment is continuous investment. We believe that we have participation size, whether it be penetration or whether it be the wallet, which is much lower than our mission. So it's an investment that continues over the years. Now, what's important is that even that in absolute numbers, this investment in the middle continues the same, supposing that it's constant in a proportional size of the size of the organization. It decreases with time. The segment has higher relevance. So if you hire, for example, 30 or 40 new commercial managers expanding to new cities, when you only have 30 or 40, you double. When you have 150, if you get another 30, that's 20% more. So in the relative proportion, I believe that these investments decrease with time. Another point, we're going to start the budget process now, but another process is also in other areas where you have the expansion in commercial strength and also structural expansion, as we said, in innovation, data science, technology. We've more than doubled the contingent during the last 3 years. So I believe that today we have a critical mass of talents in the bank and a size which is already supports us well for the growth and for what we plan for the next few years. Therefore, this level of recount and expansion, for sure, we're going to continue growing, but at a lower level than what we've presented during the last 2 years. We have a question about the provision level. The middle default level is default that we're comfortable with. You asked about the FGI role. We follow the averages that the BNDES publicizes. We've had banks that have 5, 6 default. Ours does not reach 1%, 0.7. The default that we have in the portfolio of FGE, effective losses, is the same that we have that is not FGI portfolio. We use the same credit policy that we apply for our own operations. Therefore, I don't think that there was effect. If there is, in fact, default, then, of course, part of this will be recovered by the insurance that was bought with FG. But for us, it's very secondary. And the rates are before any FGI coverage. Perfect. Thank you for the answer. Well, we have another question here. Gustavo Schroeder from Bradesco. Good morning. Good morning, Lulia, Morejo, Ricardo. Congratulations for your results. I would like to ask a question about guarantees. This has always been something important. I would like, how is this pricing of these guarantees in this scenario with higher interest rates? I know that there's some different characteristics depending on the cycle. So if you could elaborate a little bit on the guarantees, the evolution. We have seen that the portfolio hasn't followed the other lines as much, so I'd like to follow this guarantee line, which has always been important for the bank. And another question I have about these new initiatives, the private consigned, insurance. Could you give us an update about your modeling? Do you have relevant number for us to include the models, or are you still in the initial phase? Thank you. Cool, Gustavo. Well, when we talk about guarantees, what we have in the last few years is a certain change in the nature of the guarantee. You will probably remember that years ago, the largest part of these guarantees was related to contingencies, whether they be fiscal or labor contingencies, and you would issue these predetermined, and normally these were deposited, and the companies discussing this with a chance of winning or losing, and this would be guaranteed by this. This is still works like this. It's still an important part of this portfolio of guarantees that we have, but this product started suffering a lot of competition for the guarantee insurance, even though it has different guarantees to the bank bail. It's a cheaper product, and so this lost a bit of its we opened our own insurance broker, which offers the guarantee insurance when companies request this product. Today, you have a dynamic that is more favorable in those related to infrastructure projects, where you have guarantees of different natures that's given. You have the guarantee of the obligations that were taken over in the auction, the performance guarantees, the guarantees that are given, for example, the BNB, the BNDES, based on disbursements that they make for these projects. That's where the dynamism is, and the pricing is very adequate. Also, because a lot of these performance bills, the allocation of capital is lower, 50%. So the risk is reduced because these are clients that we know, and we know what their capacity is of delivering the projects that they acquired, and with the capital allocation, which is lower. And your second question, what was it? The broker, yeah. Okay, the broker is doing very well. We're actually studying to see if we should do anything more specific, but due to being a company that does not involve capital or funding or anything like that, we have a very we have something that's already profitable for the bank or within the results of the organization, but it for sure is a line that contributes positively. The consigned credit, we're still enthused about the product, but it has a slower impact than what we imagined due to several issues. One of them is the time. Once we've closed the agreement with a company, you have to have a technological integration. It's quite light for us. We developed a system. A system is all in the cloud. It helps the human resources area of the company to do the consignment. It helps with the accounts. So it doesn't bring a huge workload to HR, but it comes, when we talk about priorities, sometimes we could imagine that it would take 60 to 90 days after the agreement has been closed, and it has reached 150 days. So for the time being, it is small in relation to the results of the company. Okay. We are now moving towards the closure of the results, transmission of the results. I'm going to give the floor of Morejo and Lulia to give us their final considerations. Well, thank you very much for the opportunity. It has been a pleasure to be here, and I hope to see you all again soon in the next video conference. Thank you so much. Well, thank you very much, everyone. I would like to say that we're very enthusiastic with the projects that are ongoing. The results are showing up. We feel that we have very well-prepared teams. We have the internal talents that we need. We have the support of the main shareholder to do what we are doing, and things are beginning to give us results, which makes us very happy. So thank you very much for your participation, and we'll see you in our next conference. Thank you, Lulia Borejo, for the presentation. We thank you all for your participation. And the presentation is available on the Investor Relations site. The video of the transmission will be in our YouTube channel. If you have any question, Investor Relations is at your disposal to answer any questions. And see you again soon.